This is starting the internet at 5 million IP users and crypto at 5 million wallets. And what we saw is the internet, which was the fastest adoption of technology the world had ever seen, it grew at 76% a year and then slowed down after year 8 to 43% a year. Crypto has been growing at 137% a year. It's now at 516 million users versus 187 million of the internet at the same stage. And then what we did is assume that crypto just slows down its growth to the same as the internet. I don't think that's going to happen. I think it'll be faster. But it gets by 2025, the end of 2025, we get to 1.1 billion users. So that'll be double the pace that the internet grew.
The Bitcoin network processed its 1 billionth transaction at 9:34 p.m. on May 5th, a notable milestone for the leading cryptocurrency. Clark Moody, a website tracking Bitcoin transactions, shared this achievement on social media, highlighting that it occurred exactly 15 years, 4 months, and 4 days after the first Bitcoin block was mined on January 3, 2009. Renowned macro analyst and former Goldman Sachs executive Raoul predicts another significant milestone for the cryptocurrency industry in 2024. He noted that despite recent price declines, crypto adoption is progressing at twice the speed of the internet, and is expected to reach around 1 billion users by the end of 2025. Independent Bitcoin analyst Willy Woo shared similar predictions, stating that the industry is on track for 1 billion users by the end of 2025, supported by Binance's data showing that 65% of crypto users hold Bitcoin. While some analysts believe this milestone might take longer, potentially by 2030, there is broad agreement that reaching 1 billion users is imminent. This growth is anticipated to significantly increase the value of all digital assets. In a recent video on his Real Vision platform, Powell discussed macroeconomic conditions and their impact on the cryptocurrency market, reinforcing the optimistic outlook for crypto's future adoption and value.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So firstly, we observe that over time, the trend rate of GDP growth has been falling in the United States and all around the world. Current trend rate of GDP growth is about 1.75%. Why is it falling? If you remember, trend rate of GDP is driven by 3 key factors. 1, population growth. 2, productivity growth. 3, debt growth. So let's address these 3 factors. Firstly, let's have a look at productivity. Productivity has been declining over time as the workforce has been aging, and that lowers the trend rate of GDP. Debt, on the other hand, has been rising. But what we find is that household debt growth actually stops in 2008 because the banks just stopped lending to people, so it's just harder to accumulate debt. Also, corporates have also been paying off debt and have really not been growing as fast as GDP, but really a lot of the debt growth is now driven by the central banks, as we all know. Currently, the US is running massive deficits and is financing it by issuing yet more debt. But the key thing here, the thing that drives everything for the everything code and the world around us, the return on assets, the inflation, everything is driven by demographics. So here's the working age population, aged 15 to 64, trend rate of growth. It's been declining over time as the population ages. Those people are less productive. The older you get, the less productive you are. They had borrowed debts in their early years and now are debt tapped out. So this explains a lot, and I've talked a lot about this on Real Vision in the past. But we can also project forwards. And if you remember my piece about the retirement crisis, I've been introducing this chart for a while, which is the labor force participation rate versus the deaths rate. This is the births rate going forwards by 14 years. And obviously the birth rate drives how many people in the labor force over time. And it suggests that participation in the labor force should continue to fall over time. Now, we've had some pickup as part-time workers have come back into the workforce because people don't have enough money, and we'll see some of that too. But over time, we're going to see the labor force participation rate falling because the replacement of new people in the population is not as much as people leaving the workforce. And that is the problem that slows economies. It's affected Japan, now affecting China, South Korea, Taiwan, and most of Europe. So anyway, that is the megatrend. But this megatrend has some special qualities. When you strip everything out, and I keep saying demographics is everything, you find that the labor force participation rate is exactly mirrored by US government debt as a percentage of GDP. So what it says is as the less people in the labor force, the economy slows, but there's all of the services to pay for the old people, the government debt increases. That correlation is stunning, and that is an incredibly powerful chart to understand the world we live in today, why governments keep issuing debt, and eventually why they're having to print money to solve it. It's all a function of population. So what they do with that debt is they add liquidity into the system. That's the debasement of currency that I've talked about. And you can see the correlation between Fed net liquidity and the US government debt as a percentage of GDP. They're basically the same thing. Yes, the scaling's different, but overall, the trend is the same. So they're using liquidity to pay for the growth in debt by debasing the currency. It's called financial repression.
According to former Goldman Sachs executive Raoul, 2024 marks the beginning of the debt refinancing phase in the Federal Reserve's four-year economic cycle, as well as for other major central banks. This phase will necessitate the end of quantitative tightening policies and the initiation of easing measures to manage their substantial debts. Powell explains that these debt refinancing cycles and ongoing monetary debasement are integral to what he calls the Everything Code. This code also encompasses how different asset classes respond to continuous monetary debasement. According to Powell, only two asset classes, crypto and technology stocks, have consistently outperformed and will continue to do so. Cryptocurrencies hold a significant advantage due to their four-year halving cycles, which align well with business and U.S. election cycles. In 2024, several key events will coincide: a Bitcoin halving, rate cuts, and the implementation of monetary stimulus to alleviate economic conditions ahead of the election. This confluence of factors will also assist the Federal Reserve in managing the nation's substantial $34 trillion debt load. For Powell, this combination indicates a substantial appreciation in crypto asset prices. Let's return to the video for further insights.
The other stark thing that we found in the Everything Code is actually the real mechanism is that most of the government debt increase is just paying interest on existing debts. They're not actually borrowing a lot more to invest in the economy. It's basically servicing of old debts. And so there is a very strong correlation between the interest payments from the previous cycle and then the liquidity for this cycle. So i.e. they issue new debt, it comes up for renewal, they've already been issuing new debt again this cycle, so to pay for the interest payments from the last cycle, they debase the currency via Fed liquidity, so they're increasing liquidity into the system. Now look at that curve, that's the expected path here, driven by the interest payments from the pandemic debt, which was a huge increase in debt. Now, this debt keeps compounding, obviously, because you're adding debts on top of debts on top of debts on top of interest payments. So I don't expect it to play out fully like this, but we should expect a big increase in liquidity going forwards, and that's crucial to the theory. You see, look at that trend of total liquidity. Think of it, again, in a different world. That is the ongoing trend of debasement of currencies. That, when you debase the currency, gives you an optical illusion that asset prices are rising. So this chart of the NASDAQ versus the total liquidity index shows how correlated they are. It's actually 97.5% correlation. Now, the NASDAQ actually outperforms this because it's a secular trend. But this debasement explains almost all of the movements of all assets over time, which is why everything is so correlated. Yes, some things lead, some things lag, but this is the crucial chart to understand. The answer to the demographics is more debt. The demographics is causing a slower economy. And to get over that, they issue more liquidity, debase the currency to pay for it. That makes asset prices rise. This is the Everything Code, and it's really important. This is the global liquidity index from all the major central banks. It's growing at an 8% annualized rate. Now, Once you add in global inflation, and let's call global inflation about 4%, you've got a 12% hurdle rate for any investment. Now, that's pretty staggering, because if you think about the S&P 500, it does about 12% a year. So basically, you're not getting ahead by doing it. Your savings aren't accruing future value, just present value. This 12% hurdle rate is a huge problem for people if you don't understand it. You are basically getting poorer if you don't hit your 12%. So if you're just investing in bonds and think it's a good idea to get the 5% interest, well, your future self is getting poorer. When we talk about crypto, I use the charts of Bitcoin here because Bitcoin has the longest price history. It too is stunningly correlated with global liquidity. You see, Bitcoin has an 87.5% correlation, not as high as the NASDAQ, because, as you can see, it's the periods of outperformance that lowers that correlation. When we start to get, full kind of mania, crypto mania cycles that you get in this exponential asset, because it is a much more exponential curve, because it's driven by tech adoption. And we'll come on to that in a second as well. But you can see that liquidity is the driver of Bitcoin plus technology. But when I look at Bitcoin versus global liquidity, it's outperforming the debasement by 105% a year. I mean, that's a staggering difference versus global equities, which are not doing anything at all and are probably negative. That's a huge, huge difference in your future purchasing power, which is why this is such an important asset.
Meanwhile, Willy Woo has made another exciting prediction for Bitcoin. In a tweet shared earlier today, the on-chain analyst forecasted that Bitcoin will reach $1 million per coin within the next 10 years and subsequently become a reserve currency. Woo's tweet reads, "What a time to be alive. Bitcoin at $1 million will happen easily in the next 10 years. The follow-on impacts will be long-lasting. Bitcoin becomes a reserve currency, a purge of central bank corruption, wars become expensive, younger leadership building for a future they will live in." He also referenced the 2021 tweet where he predicted that by 2024, it would be political suicide to be anti-Bitcoin. Woo's prediction and recent events highlight the evolution and growth of the cryptocurrency industry in the United States over the past few years. Before 2021, few could have imagined the crypto industry becoming so central in a U.S. presidential election. Yet here we are. A few days ago, former President Donald Trump, while speaking to supporters who invested in his latest NFT collection, openly expressed his support for cryptocurrencies, emphasizing their importance in modern finance and politics. Additionally, Trump announced that for the first time, his campaign will accept cryptocurrency donations. Although Trump previously showed skepticism toward Bitcoin, his recent statements have increased his popularity among cryptocurrency investors, in contrast to President Biden, whom Trump criticized during his speech. Will a candidate's stance on cryptocurrencies influence your vote in November? Please share your thoughts, comments, and observations in the comment section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.